Hello everyone, my name is John, lead analyst and founder of JP Strategic Investments, and today I'm going to walk you through our bullish thesis on Tesla. First I'll go through the fundamentals and what we like about the business, then we'll get into the financials, and then finally we'll talk about where we think the stock price will go. The first reason that we're bullish on Tesla is that we believe that EVs are the future of the automotive industry. The three main reasons we believe this to be true are that EVs have far lower maintenance costs, longer lifespans, and better performance than internal combustion engine or ICE vehicles. For an in-depth outline of why we believe this to be true, you can check out our article EVs are the Future at our website jpstrategicinvestments.com. Now, if EVs are the future, then the company with the best EVs stands to gain the most. Which brings us to our second reason we're bullish on Tesla, and that is their lead in EV and battery technology. Tesla has a huge lead in battery technology. As you can see from this chart, their vehicles have a greater range than any other EV on the market by a significant margin. This is because their batteries and drivetrains are far more efficient than those of their competitors. They also have the largest production capabilities when it comes to battery cells. Tesla produces more batteries than all other automakers combined. With Gigafactory 1 continuing to ramp and other gigafactories coming online soon, we believe the production gap will continue to widen. Not only does this allow Tesla to continue to reduce costs through economies of scale, but it also limits the ramp speed of other automakers' electric vehicles. You can only make as many EVs as you can produce batteries for. If other automakers want to sell more EVs than Tesla, then they have to be able to produce more batteries than Tesla. Not to mention those batteries need to also be competitive in price and quality. We don't see that happening anytime soon, if at all. Now, Tesla also is the only automaker to have their own charging network. Other automakers have partnered with third-party charging networks. Tesla's latest V3 superchargers are the most efficient and can charge Tesla's Model 3 from 10 to 80% in under 30 minutes. And if you just need a quick charge, you can get 75 miles of range in just 5 minutes. Now moving on to our third reason that we're bullish on Tesla, and that is their lead in autonomous vehicles. This is probably the most important factor in our bullish outlook and long-term price target, as it sets Tesla apart from other automakers, and because we believe that it offers immeasurable profit potential. We believe that Tesla will be the first to solve full autonomy for two main reasons. The first is their approach. While seemingly every other self-driving company is using LiDAR combined with high-definition maps, Tesla uses almost solely cameras. If you don't understand the difference here and why it is important, we highly recommend watching Tesla's Autonomy Day presentation. It's on YouTube, it's a long video, but it's well worth the watch. We recommend that every Tesla investor watch that video. For now though, I'll give you a quick explanation. Essentially, LiDAR works the same way as how dolphins or bats use sonar to navigate through their environments. The system sends out thousands of signals per second, and sensors on the car use that information to map a three-dimensional model of their environment. Then it compares that information to a high-definition GPS map to figure out exactly where the car's location is down to the nearest centimeter. This allows the car to navigate anywhere within a pre-mapped environment. It seems like a good idea, but there are some major flaws to this system. First, as I mentioned before, everywhere the car drives needs to be pre-mapped. This takes time and money and has to be redone every time there are new roads. Not to mention the fact that the system is thrown off anytime a road is temporarily changed by ongoing construction or other situations. Second, since LiDAR only gives you locational information, it has no ability to read signs or make inferences based on images. This is a huge issue because everywhere we drive is designed for navigation by human vision. Finally, LiDAR is very expensive. The cheapest LiDAR systems available right now on cars cost around $8,000, and often much more than that. And that's just the hardware costs. Tesla's system, on the other hand, uses cameras and an advanced neural network, along with a few ultrasonic sensors and radar for situational support. The car's computer uses artificial intelligence to interpret the images that the cameras send to it, just like a human does. This means that once the car can interpret the images as well as a human can, it can drive anywhere that a human can without the need for high-definition maps. the car can read signs and interpret imagery from the camera to help it navigate through a variety of situations. Finally, the hardware costs are a fraction of those on LiDAR systems, as cameras are relatively cheap. As you can see, while LiDAR may offer a shortcut to a certain level of autonomy, computer vision makes much more sense long term. The second reason we believe Tesla will be the first to solve full autonomy is their fleet. Now, the main way these self-driving systems improve is by having the cars drive autonomously and then telling the AI what it is doing right and what it is doing wrong, and then adjusting things to make them better, or essentially training the AI system. Progress in this training is generally measured in miles driven, because the more miles the system drives, the more data it collects, and theoretically, the better it gets. Now, if you do a Google search for this information, most of the charts and articles will actually show you that Google's Waymo is by far and away the leader in miles driven, followed by a variety of other companies, including Nvidia, GM, and Apple. Often Tesla doesn't even show up on the charts. This is because the people researching this information either don't understand it or they're intentionally trying to be misleading. Let me explain why. There are two ways the data is usually portrayed in these articles. The charts either include simulated miles, or they only include level 4 autonomy. First, simulated miles are very different than real-world miles, so the two should not be conflated, and what really matters is real-world miles. As for the rankings that only include level 4 autonomy, for these, you need to understand what level 4 autonomy is. There are actually 5 different levels when it comes to autonomous driving. As you can see in this graphic here, in level 3 and above, the quote-unquote driver does not have to be paying attention and only has to take over in very limited conditions, whereas with level 2 and below, the driver is always supposed to be paying attention. Well, Tesla doesn't normally pay its employees to test its vehicle's autonomous features, like most other self-driving companies. Instead, they let their customers train the system. Everybody that buys a Tesla and enables the self-driving system when they're driving is training Tesla's self-driving system. Now, obviously, Tesla doesn't want to be sued, so they're going to tell everybody that they need to be paying attention all the time. This means that as long as they tell drivers to pay attention, their system will always be categorized as level 2 or lower, no matter how good it is. If we look at real-world miles, on the other hand, we see that Tesla is by far and away the leader, with over 3 billion miles and counting, because every day, everybody that's driving a Tesla is adding to those miles. And Tesla is only going to widen this gap because the more cars they sell, the more people will be training their self-driving system. They can pull data sets from the fleet with a push of a button and use shadow mode to update new features. Again, if you don't understand some of this stuff, watch Tesla's Autonomy Day video. Once Tesla solves self-driving, that opens the door to huge profit potential. Not only will they be able to charge very high prices for their self-driving software, but they will be able to execute on their robo-taxi plan. Tesla has been planning for some time now to have a fully autonomous fleet of robo-taxis. They will be able to charge far less than Uber and Lyft, while still making more profit because they don't have to pay drivers. Not only that, but Tesla owners will also be able to add their car to the robo-taxi fleet when they are not using it, and Tesla will give them 50% of the revenue, essentially making buying a Tesla an investment rather than a purchase. We believe that when Tesla truly solves self-driving, the stock could easily surpass $10,000 per share, which we believe will happen in the next 5 to 7 years. The next reason that we're bullish on Tesla is their vertical integration. Tesla does almost everything in-house, from their vehicle and battery production to their self-driving software and hardware, and even their own charging network. This allows them a vast amount of flexibility when it comes to design, and it also helps them cut costs because they aren't paying someone else to do these things for them. The other part of this vertical integration that we think is hugely undervalued is that Tesla sells its cars directly to customers, as opposed to other automakers that have to sell their cars through franchise dealerships. You see, years ago, when automakers first started popping up in the US, they found it hard to handle production along with the logistics of selling and shipping to customers. They came up with the idea of franchise dealerships, and that way the automakers could focus on manufacturing while the dealerships did the selling and took a cut of the profits. Well, the dealerships got smart and realized that once the car companies got big enough, they could just cut them out of the whole picture and go back to selling directly to customers. They went to their local governments and negotiated a deal with the automakers that forced them by law to sell through their franchise dealerships. Well, when Tesla entered the market, they didn't want to give up a huge chunk of their profits and decided to sell their cars directly to customers. They could do this because they didn't have any franchise dealerships in the first place, so they weren't putting anyone out of business by selling the cars themselves. This means that Tesla is the only automaker that gets to keep all of their profits, allowing them to easily achieve the largest gross margins of any automaker at around 25%. That's double the margins of most other automakers. Finally, there's one more fundamental that we have to get to before we get into the financials, and that is Tesla's brand. Over the past 5 years, Tesla's brand has become synonymous with cutting-edge technology and sleek modern design. Elon Musk also brings a huge amount of publicity and following. The fact that he is involved also associates Tesla with SpaceX and the other groundbreaking things he has done. Many people argue that Mr. Musk is a liability to Tesla, citing his Twitter account and his run-ins with the SEC, although we believe he offers much more to the company than he takes from it. Lastly, Tesla has built a brand so strong and a product so compelling that they have no need to advertise. In fact, Elon Musk has touted this many times that the company has never paid for advertising. The reason so many people buy Teslas is because one of their friends had one, they got to drive it, and they immediately wanted one. This speaks volume and gives us huge confidence in Tesla's brand. Alright, now we've covered the fundamentals, let's look at the financials. Tesla has been growing revenues at a significant pace for the past few years, but hasn't managed to have a profitable year. That being said, the last 3 quarters have been profitable, including Q1 of 2020, when the last month of that quarter was greatly affected by COVID-19. This is very promising from a profitability standpoint. Also, as we talked about earlier, their automotive gross margin is currently just above 25%. And the more important thing to look at is that that has been growing. In Q1 of 2019, their gross margins were only 20%. We believe that these margins will continue to increase as Tesla achieves further economies of scale and as their self-driving software becomes more valuable. Tesla also has a strong balance sheet with over $8 billion in cash and less than $4 billion in debt. Free cash flow also looks good, as it was positive the last 3 quarters of 2019 and was only negative in Q1 of 2020 as a result of inventory growth due to a slowdown in deliveries because of COVID-19. Overall, we like their financials. Which brings us to the big question. Where do we think their stock price will go? Well, we believe that by the end of 2021, Tesla will be above $1,800 a share. This is solely based on sales growth and only some small improvements in their self-driving software, like additions to their stopping at stoplights and stop signs. Long term, we believe that Tesla will solve full self-driving within the next 5 to 7 years. In that time period, we also believe that Tesla will have fully ramped Gigafactory Shanghai, along with at least 3 other Gigafactories in Berlin, Texas, and most likely the UK. We estimate that the increase in production capacity, combined with solving full self-driving, should push the stock to surpass $10,000 per share between 2025 and 2028. We realize that we have left Tesla's energy storage and solar businesses out of this thesis. While we do believe these businesses will be successful, we don't think that they will contribute to the income statement in a meaningful way until roughly 2025. For this reason, we did not focus on those aspects of Tesla's business for now. And that concludes our bullish thesis on Tesla. We really hope this video has been helpful to you guys. We pride ourselves on giving you the best analysis possible. Don't forget to subscribe for more updates and check out our website for more stock analysis and earnings predictions. Have a great day, everybody.